When you think about how the wealthy build their fortunes, what comes to mind? You probably think of stocks, real estate, or successful businesses. Those are all part of the picture, of course. But there is another tool they use. It is a powerful tool. It is often overlooked by the average person. I am talking about life insurance. For many, life insurance is just something you buy to protect your family if you die unexpectedly. It is a safety net, and it is that. But for the wealthy, it is so much more. They see it not just as protection, but as a strategic financial asset. The super rich have been using life insurance for generations. They use it to grow their wealth, protect it from taxes, and pass it on to their children and grandchildren seamlessly. This is not some complicated scheme available only to billionaires. It is a strategy that relies on the fundamental features of certain types of life insurance policies. The key is understanding how these policies work. You need to see beyond the death benefit. You need to see the living benefits. The wealthy use life insurance as a private, tax-advantaged savings and investment vehicle. It helps them build a strong financial foundation for their families for years to come. Think of it this way. A life insurance policy can be like your own personal bank. It is a place where you can store your money and watch it grow, shielded from many of the taxes that eat away at other investments. It is a place where you can borrow money against your own assets without a lot of hassle. And when the time comes, it is a way to deliver a tax-free lump sum of cash to your loved ones. This ensures your legacy lives on. This is the secret that has helped families maintain their wealth through thick and thin, across market crashes and economic downturns. So, why isn't everyone doing this? The truth is, many people are simply not aware of the full potential of life insurance. Financial advisors who serve the middle class might not focus on these advanced strategies. They often stick to the basics of term insurance for income replacement. But I am here to tell you that you must be your own best advocate. You need to educate yourself. You need to understand the tools that can help you secure your financial future and the future of your family. It is time to pull back the curtain and learn the strategies the wealthy have used for decades to their advantage. Let's get one thing straight right now. When I talk about using life insurance for wealth, I am not just talking about a simple term life policy. Term life is important. It provides a death benefit for a specific period, like 20 or 30 years. It is pure protection, and it is affordable. It is a must-have for anyone with dependents. But it is not the tool we are talking about for building generational wealth. The key lies in permanent life insurance. This includes policies like whole life, universal life, and variable universal life. These policies are designed to last your entire life. Permanent life insurance has two main components. The first is the death benefit. This is the tax-free money your beneficiaries receive when you pass away. This is the part most people know about. The second component is the cash value. This is the living benefit. A portion of every premium you pay goes into a cash value account. This account grows over time on a tax-deferred basis. This cash value becomes a powerful financial tool that you can use while you are still alive. It is a savings and investment component wrapped inside your insurance policy. So, how does this help you build, protect, and pass on wealth? First, the cash value grows steadily, creating a new asset for you. You can take out loans against this cash value. Second, it protects your wealth. The death benefit is generally paid out income tax-free. Also, in many states, the cash value is protected from creditors and lawsuits. Finally, it is the ultimate tool for transferring wealth. A life insurance policy can pass a significant tax-free sum directly to your beneficiaries. This money does not have to go through the long and expensive probate process. It provides immediate liquidity for your family. They can use it to pay estate taxes, settle debts, or simply have the financial security you always wanted for them. This is how you create a legacy. You are not just leaving money behind, you are leaving behind a plan. You are ensuring your hard-earned wealth continues to support your family for generations. Now, let's dive deeper into permanent life insurance. It is not just one single product. It comes in several forms, but the most common are whole life and universal life. Whole life insurance is the most traditional type. It offers a guaranteed death benefit, a level premium that never changes, and a cash value that is guaranteed to grow at a set rate. It is predictable and stable. Universal life or UL insurance offers more flexibility. Unlike whole life, UL policies allow you to adjust your premium payments and your death benefit within certain limits. Indexed Universal Life or IUL is a popular choice for those looking for a bit more growth potential without taking on direct market risk. The growth of your cash value is tied to the performance of a stock market index. You get to participate in the market's upsides, but you are also protected from the downsides. Most IUL policies have a floor, often at 0%. Variable Universal Life, or VUL, is for those with a higher risk tolerance. Your cash value is invested directly in sub-accounts. This means your cash value can grow significantly, but it also means it can lose value. There is no floor to protect you from losses. Let's talk about one of the biggest enemies of wealth creation. It is taxes. These taxes create a drag on your money's ability to grow. The cash value component of a permanent life insurance policy grows on a tax-deferred basis. It means you do not pay any income taxes on the growth of your cash value as it happens. The money inside your policy compounds year after year without being reduced by annual tax bills. This allows your wealth to grow much faster. This principle is especially powerful for high-income earners who are in higher tax brackets. A tax-deferred vehicle like life insurance becomes incredibly valuable. The primary way to do this is by taking out a policy loan. You are not withdrawing your money. You are taking a loan from the insurance company. Because it is a loan, the money you receive is not considered taxable income. You do not have to go to a traditional bank. You simply call your insurance company and request a loan against your cash value. The money is often available to you within days. Yes, the insurance company will charge interest on the loan. However, your full cash value can continue to earn interest and dividends. In some years, the growth you earn could even offset the interest you owe on the loan. You also have complete flexibility in how you repay the loan, or you can choose not to pay it back at all. If you do not repay it, the loan balance will simply be deducted from the death benefit. The most significant tax protection comes from the death benefit. When you pass away, the money paid out to your beneficiaries is generally received completely free of federal income tax. Finally, life insurance can be structured to avoid estate taxes. If the life insurance policy is owned by a properly structured trust, the death benefit is not considered part of your estate. The entire sum passes to your heirs outside of your taxable estate. Another major risk to your wealth is unforeseen legal trouble. In many states, the cash value of a life insurance policy is given special legal protection from creditors. For business owners, doctors, and other professionals who face a higher risk of lawsuits, this feature is not just a bonus, it is a necessity. Financial markets are a powerful engine for building wealth, but they come with inherent risks. Smart wealth builders look for ways to mitigate it. They need an anchor that holds firm when the seas get rough. For many, a properly structured permanent life insurance policy serves as that anchor. Even more popular today are indexed universal life policies. You get the upside of the market without the downside risk. This protection from loss is a powerful psychological and financial benefit. When a person passes away, their estate can become illiquid. This means that their wealth is tied up in assets that are not easily converted to cash. This liquidity crunch can create a crisis for the heirs. If there is not enough cash on hand, the family may be forced to sell assets they wanted to keep. This is where life insurance provides the perfect solution. The death benefit provides immediate liquidity. This cash can be used to pay all the final expenses and taxes without having to touch the core assets of the estate. When you pass away, most of your assets do not just go directly to your family. They have to go through a legal process called probate. This process can be a nightmare. Life insurance offers a direct path around this probate nightmare. The money does not pass through your will and is not part of your probate estate. It is private, it is fast, and it avoids all the costs and delays. This is a huge advantage that ensures your wealth gets into the right hands efficiently and without hassle. Passing down wealth can sometimes create complicated family dynamics. How do you treat your children fairly when you cannot simply split the main asset? Life insurance provides an elegant solution. It is the perfect tool for estate equalization. When you pass away, the child active in the business inherits the business itself. Your other children receive a cash inheritance from the life insurance policy that is equal in value. Everyone is treated fairly, and family harmony is preserved. For many people, passing down wealth is not just about taking care of their family. It's also about making a positive impact on the world. Life insurance allows you to do both. One powerful strategy is to use life insurance to replace the value of a charitable gift. It leverages your donations into a much larger final contribution to the cause you care about. It is the ultimate tool for ensuring that your wealth continues to do good in the world. Let's summarize. Building lasting generational wealth is built on 3 core pillars: growing your assets, protecting them from threats, and transferring them efficiently. A properly structured permanent life insurance policy can powerfully address all 3 of these pillars at the same time. But you must recognize that this is not a get-rich-quick scheme. It's a long-term strategy. You are planting a tree under whose shade you may not sit, but your children and grandchildren will. This strategy requires a shift in mindset. You must stop thinking of life insurance as merely an expense. You need to see it for what it truly is, a multifaceted financial asset. But knowledge without action is useless. The power to change your financial destiny is in your hands right now. Your second action step is to find the right team. You need a qualified, independent financial advisor who specializes in these types of strategies. Finally, and most importantly, you must begin. The biggest advantage you have in any long-term financial plan is time. The sooner you start, the more time your money has to grow and compound. The secret of the wealthy is not that they have access to magical investments. It's that they are disciplined, they are strategic, and they start early. You can do the same. Take control. Start building your legacy today.